Hi there, investors. It's Nick Garner here from Invesmore, and today we're going to go through an interesting property we found this morning. We're going to look at a number of different variables, and from there, we're going to give it a score. So let's get into it. All right, the scoring system works like this. I've got different variables here, and I've already marked a couple already just to show you what it looks like. So we're going to go through each of these things. So condition being condition of the property, location as in just the actual street level location stuff, whether it's looking good, nice cars on the road, tidy road, and all these kind of variables. The area is just generally the town or the locality that the broader locality that the property's in. Demographics, i.e. the kind of people that live there. Crime, self-evident. How quickly property takes to sell on average. How quickly it takes to rent on average. The yield that can be achieved on the property and the capital growth. And then finally we add it all up and we give it a score. So let's get into the property itself. This is a £170,000 3-bedroom semi-detached property, and it is around 900 square feet or 86 square meters. Let's have a look at the photos. It's nicely presented, and you can see that already we've got nice gates here, nice front yard. This is a property that people have obviously taken care of. It's pleasantly decorated, good wood floorings. Nice to see this little touch where they've covered the radiators. The living room looks it's in very good condition. Since these people have cared for this property, I expect these are good quality carpets. They're using vinyl mat emulsion, I think, on the walls and ceilings. What that means is that if they're in reasonably good condition, which they appear to be, then you should be able to just give it a wipe and clean it. The other thing I've noticed here is that the walls are very smooth, which means that it's probably not plaster and lath. It's more modern than that. So the walls are good. It's probably stud wall, I expect, with plasterboard. And here we have the dining room. Nice floor finishing here, and again, just nicely decorated and taken care of. You can see here we've got a good galley kitchen and reasonably modern kitchen with good units here. I think that Indeset, that's a good make. And I think these people, the ovens are good, by the way. Yeah, and again, it just shows that people care about this property. It's a nice house. The master bedroom with wooden flooring, and I expect it's got soundproofing underneath it. And I also expect that this is a wooden beamed floor, so sound would travel through it a bit, but that's the way it is. And the other thing, just to say, I don't know where that goes, but maybe it's a wardrobe. We'll have a look in the floor plan in a minute. And fitted cupboards on the other bedroom. Again, nice carpeting from what it appears to be. Yeah, nice, and louvered blinds and so on. I haven't seen any threat of damp or anything like that. So overall, this property is in good condition. And this is the home study area, which adjoins the 3rd bedroom, which we're going to see in a minute when we go back to the floor plan. Bathroom's in good order, nicely decorated. Nice yard, reasonable size, and you can see double doors opening to the patio with this lean-to, which is again a nice touch. If we go back to the floor plan, you can see how this is all laid out. A future owner might want to knock this through to give it more space, because this space is kind of dead, and maybe if you knock that through, you'd create more circulation here, and maybe you knock that through there, and then the whole ground floor would be much more open and more friendly, as it were. Upstairs, we've got the master bedroom, and you can see here that's the storeroom, and just behind my head there, I'll get out of the way, you can see the shower and hand basin. And then on the landing, you've got that study area, which is very useful. Okay, so in terms of the condition, I'm going to give that a 4.5 because that is literally give it a deep clean. It's ready to rent. Now we're going to have a look at the location. There it is. There's our house. So this house has been extended, as you see, and you can also see that they probably don't use this area as a drive, but they park outside, which shows you that there's plenty of parking availability. You can see here, not too many cars. This photograph was taken in 2019. Nice cars, nice area, good demographics, I expect. We'll check that out shortly. But overall, I would say that based on Google Maps, that this is looking good so far. Now what I'm going to do is go up to 3D level and we'll just have a quick look around. I'm going to go there and we'll just have a quick look around the area. Decent. I mean, the location is fine. It's close to a cemetery. That shouldn't put anyone off because it's not backing onto the cemetery. And you've got access to green space. It's near a big road, but not too close to a road. There's no commercial property nearby. This is just a very nice, quiet residential area. I would say location, assuming that you just want a quiet place, I would say I'm going to give it a 3.5 because it could be closer to shops and so on. Now let's look at the area. Now for that, we need to look at a few different things. One of them is crime and access to central Manchester. If you look here on the high-level mapping, you can see that in fact it's 20-minute cycle. It's around 35 minutes public transport and about 25 minutes drive. So it's really very good for central Manchester. The other thing I would say about this area, just looking at it at a higher level, is that being Moston, it had a reputation for a lot of crime. Now, we have a lot of data on crime. And overall, when you look at crime, it's very important to look at this from a street-by-street basis. And the reality is that there isn't that much crime. So I'm reasonably confident that we wouldn't have, or an owner wouldn't have any problems with crime in this little patch. And as I said, crime is very localized. Now, this data is for a whole year-long period. So it's pretty reliable in that respect. Okay, let's just go and give that an area assessment. I'm going to say that it's a 4 because of its location and because it's got a lot of green space nearby, and overall it does have decent amenities and so on. So from a crime point of view, I'm going to give it a 4. Now, there are parts of this general area which aren't great, but the fact is that there's very little reported crime where this property is, and ultimately that's what matters most. Now we're going to look at demographics. The demographics are okay here. Now, what we're looking for, just so you understand, is the proportion of the population who are C1, and the reason is because they're the people who are going to rent property. We're also interested in the proportion who rent privately. Now, this data comes from 2019, or 2011, should I say. It's still very relevant and very accurate because areas really just don't change very much from one decade to another. The only time you see rapid change is when you've got a lot of new build going on, but there's no new build, so there's no real shift in the area. The average age is 36, which tells me that it's essentially a family area. And we have a high proportion of people who are working, so 71%. This is very encouraging, and we can see similar numbers for other little patches nearby. So overall, I'm going to give this a very high demographic score of 4.5. And the reason is that this is perfect for renting out to somebody who doesn't have the money to own a property, but has enough disposable income to rent a nice property and be financially secure. So I'm very positive about that on a demographic level. The next thing we're going to look at is time to rent and time to sell. So I'm going to get I'm going to just hide the capital growth data, which we're going to look at in a minute. Overall, this place is very hot, to say the least. So the first thing we're going to look at is sell time. Now, this is the number of months on average it takes to sell a property in this patch. And this is postcode district data. And we have 11% property, 11% of the total stock being sold per month. Now, what we find is that good properties go almost instantly. I'm talking within a few days. And this is a very good property, I've got to say. And you'll see why when we get into some of the calculations on it. From a sale point of view, what tends to happen is that the properties that aren't such good deals, they hang around and they bring the averages down. Also, it takes a very long time for property to complete. And so if properties continue to be listed as sold subject to contract, they can hang around for 3-4 months. On average, 11%, it's good. It means that if you own the property and you want to sell it, you could sell it relatively quickly. So I'm going to give that a 4. Now, time to rent. Well, this area is absolutely red hot. Now, what this number shows is the proportion of properties rented out within 1 month that have been listed on Rightmove and the other portals. Now, to give you context, if we look at, say, M35, we can see, well, we don't have data for that, but if I go M1, for example, which would be city centre, on average, you'll rent a property out in around 2 months, which means if it's a good property, you'll probably shift it in a month. For this, you'll probably rent that property out in a couple of weeks. So this has a huge impact on the calculations, which we'll see later. Therefore, I'm giving this a 4.5. Sometimes things actually hit a 5. 4.5 is exceptionally good. And now we're going to look at yield on this. We've done a lot of analysis on this, so I won't go into too much detail on exactly how we come up with the yield number, but just to show you, we have a huge amount of historic data on rental properties for the whole of the country, and we believe that this property will rent out for around £800 a month. And the reason is because it's got 3 bedrooms. You could even create you can't create a 4th on this, but you've got 3 good-sized bedrooms plus a home study, and that's a big thing. Plus, you've got other space down here, and it's a good-sized property. So I think it would rent out for that kind of money. Let's just give it a score on yield. Now, before actually we give a score on yield, I'll just go through the numbers on this. 170. Now let's assume that you go in as a cash buyer, which I think would give you a discount. So I'm going to say 165,000 and we'll say 800. That gives us a 5.5% yield. Now, when you factor in the demographics and the yield and you kind of combine the whole lot, that makes this a very attractive yield based on the risk behind the yield. So you can have a property which is 7%, 8%, but if the demographics are really bad, then the risk of void periods and just general disruption are much higher. Therefore, when you balance out risk and reward, I think this yields pretty handsomely. Now, I'm not going to give it a 5 or anything like that. I'm going to go to a 4 on that, which is a good score. Now, one thing this area does exceptionally well on is capital growth. And for that, I'm going to show you couple of things. The first is long-term capital growth, and we need to zoom out here. Now, I'll just go through this very quickly. The last big peak in the market was 2007. This is affordability. So in other words, salaries, the multiple of salaries over average income. And the last time that we had this was 1893. So it's a really significant time in property history. What I've done here is I've got the capital growth over the capital growth in real terms, inflation adjusted, since 2007. And then from there, I've worked out whether it's gone higher or lower than 2007 in real terms. And the answer is this area has consistently performed since 2007, which makes it very interesting. Very few areas in Manchester have done it. And to give you quick context, if we look at Liverpool from 2007, essentially no area within the city has, except for, say, a little patch down here and here, but broadly you can say on average, Liverpool has not performed as well over the long term as Manchester. So from a long-term point of view, this patch is really good. Now, let's have a look at the short-term capital growth. And to do that, I'm going to hide that layer. It's also kind of switching around, but this is what we have to do. And we can see here that this patch has grown in real terms by 42% from 2017. And in the last year alone, it's grown by 13%. So let's just have a quick look at that number. It's exceptional, actually. And for capital growth, I rate this very highly. Now, one of the things about this area in general is that Moston was known, or has been known for being very rough, or certain parts of it. But as you see with crime, it's very localized. And in fact, this area has come up massively over the last 5 years. So for capital growth, I'm giving this a really high score because it's absolutely exceptional. I'm going to give it a 5. This makes this property 82%, which is a very high score. And remember, you're seeing the stuff as I'm seeing it, and you interpret it as you wish, but I'm saying that overall, I think this is a very strong property. Now let's get into the calculations on this very quickly. There's a lot of detail here, but I'll just kind of jump through things as quickly as I can. We have the property details here, what you'd probably buy the property for, the expected monthly rent. We get 5.58. Now that is a gross rentable yield because the property does not need attention. We've got all the costs for acquisition. And let's say that you wanted to buy at 75% loan to value. Then this property would cost you £56,000. Now, the one thing I would say about a property like this is if you were an overseas investor and unless you had everything lined up, all documents, the whole thing lined up, and proof of funds, then this property would go to somebody else. So ideally, what you would do is you would buy for cash, negotiate down, and then finance later, and that way you can grab a property, this property. So we'll say renovation costs £1,000. So your total acquisition cost 57. Now what I've done is I've got a fixed mortgage rate for a deal that's 80% at 5.54. I've assumed it's non-resident landlord, and I've therefore we've got all these deal stats here. So we've got the total cost, and the total cost for this property would be 7.5. I've assumed that because this is such a desirable property to rent out, that the void periods would be half a month a year, like 2 weeks a year, because really this market is red hot and will probably continue to be so. The next thing is the tax that would be payable, because you're paying 20% of gross rental income, but you can offset the management fees, but not the cost of interest. Very important point. You're going to just about break even on this property. So that would be £217. So as a cash cash deal for net cash yield, this doesn't work. The margins are incredibly thin. So, but I will say that this is a relatively high interest rate, and I know that if you could get this down to 3.8, for example, which I think you could probably do, you can get, say, £1,000 out of this a year, which makes it more viable. So that's a whole other story. But anyway, let's get back to the deal. So it's just about break even. Let's assume that the next 10 years will have the same inflation as the last 10 and that rates are going to stay fixed. So this is your cash deal. It's not great. 1.74% are adjusted ROI, and that's because rents go up in line with inflation, so do expenses, but interest rates hold. Now, ownership, same story, just longer term, just doesn't work great. Now, this is where it gets interesting. If we go to 170,000, £170,000, how would this deal look if you held onto it for 5 years, assuming the same capital growth as you had over the last 5 years, which I think is reasonable considering the kind of headroom that you've got and also the likelihood of inflation? Well, the answer is that the property would grow 54% in nominal terms. In inflation adjusted terms, that's 33%. In other words, in today's money, if you inflation adjust it, you'll get £48,000 out in capital growth. And from an ROI point of view, that's 31% nominal and 16% adjusted. This is huge growth. So what does that look like in terms of ROI? Well, 32% ROI, and if inflation adjusted, which is really the right number to look at, that's 18% ROI out of capital growth alone. And I've got some 10-year predictions as well, but just to keep this moving along quickly, we'll just concentrate on 5-year predictions. And if you flipped it, well, you couldn't, because the purchase expenses are too high and you're not able to add new value. Now, if you decide to refinance in 5 years, then you, assuming this capital growth and assuming refinancing at 75% LTV, then you could extract 72k. Now, or 62,000 inflation adjusted. Now, the important point about extracting cash out of this is that it's proceeds from a loan. So with these proceeds from the loan, you can do whatever you like with this cash. And if you're, one thing you could do is you could just buy another property. So you could buy something maybe worth around 204,000. Now, bear in mind that there's going to be house price inflation between here and there, etc. But 200 grand will buy you a 2-bedroom apartment in reasonably good order. And you can just continue rolling that investment along. And if capital growth keeps on growing, then you can just build out that cash. Now, finally, if you want to sell out, and you might do, then you could walk away with £87,000. Now, that would be your deposit and your capital gains. Now, bear in mind that when you buy the property, you have to, this is inflation adjusted, of course. So non-inflation adjusted, if you saved your rental income, which is virtually nothing, and you cashed out, then you walk away with 66 grand clear, just because you let the property cook for 5 years. These are huge returns on this property, and generally speaking, in Manchester, like 40% capital growth is huge. However, we do see properties all the time in these areas. This particular one I really like. It stacks up very nicely. And if you're interested in getting help in negotiating on the deal, we've got Jamie, who does all the property negotiation with the estate agents. He's an estate agent himself. So he's been in the game 25 years. He's really good at handling this stuff. Very simple equation. If he does the negotiation, if he gets the discount, that pays for a load of fees and saves you a load of hassle. We also handle the journey to completion. So we do the chasing up of the lawyers, the 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 surveyors, and also, if you want, we can tie in the mortgage lending in with this as well. So we've got a specialist mortgage advisor who deals with all of this stuff. So we could introduce him to you on this deal. All right, then. Thank you very much. And until the next time, good investing.